Hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vierra, and I'm once again with Gregor Gregersen, the CEO and founder of Silver Bullion, as we continue his CEO Insights series. And Gregor, last time we spoke, we talked about 2023 being a watershed year for silver, and a lot of it being because of the demand, photovoltaic cells and solar panels, things like that. So this time, I'd like to talk a little bit about price because we're seeing all this demand with silver, and a lot of people have watched the video and they responded by asking, with all the demand, why don't we see price move that much? So if you could you give us a little bit of insight with price action?
Yes. So, if you go back to 2022, early in the year, January, silver was around $23. We're looking at the price now, it's still around $23 2 years later. And over that period of time, we had huge deficits in silver, and yet the price hasn't changed. Why? And that's, I think, a very legitimate question which a lot of people are asking themselves. And some people honestly are getting somewhat fed up saying, hey, seem to be right, but yet the price doesn't move. So what I thought would be good is to have a dialogue on how the silver physical market really works and how the future market works and how prices are being determined. To start off, I think we start with the physical demand of silver. If you look at the Silver Institute for 2022, you will find that we had about 1.24 billion ounces of silver demand. And we had just above 1 billion worth of supply. So we had a deficit of 23%. About 237 million ounces were missing in a way, had to be coming out from reserves. So 2022, we definitely had a lot of silver demand. And where did it go through? Well, so it's the bars that retail clients like to buy, so 100-ounce bars, the coins, the maple leaves, American Eagles, and so on. Together, those make up about 330 million ounces in 2022. So that represents around 26, 27% of demand. In 2022, we saw maple leaf prices, eagle prices, premiums really go up, right? I mean, people were willing to pay 50% above spot for these coins. And so there's a lot of talk about there being a silver shortage, but it's important to note that really what we had is a shortage of American Eagles as opposed to a silver shortage overall, because when you are a refiner, you essentially have a choice between producing three types of silver products or categories. You can produce for the industrials, which basically are pastes and granules mostly. You can create LBMA bars, which are mostly for long-term storage. Or if you're in that business, you can create, say, retail bars, 100 ounces. If you're mint, you're then buying granules or blanks, and you actually make the coins. So you have three choices of products. With 27% or so going into the bars and the coins, we had about 73% going in other uses. And nearly all of that was industrial, plus the jewelry, plus silverware, and these other things. But either way, you needed granules for that. So that's more or less where the demand was for 2022. Now, the important thing to understand is when you, as a retail buyer, are buying some silver from a dealer, does that affect the price of silver? Well, it depends, because the price of silver is determined in future exchanges nowadays, like COMEX. So does that private transaction between you and the dealer have an effect on it? Well, if the dealer owns the bullion outright and just sells it with you, it doesn't affect anything. If the dealer is using leverage and to borrows to hold more inventory, and then uses margin accounts to essentially hedge himself so that if silver falls, he doesn't lose, then he'll actually be having shorts on the future market. So he actually creates some negative pressure on that. If you're going to the industrial side of things, well, a lot of these transactions don't really involve the future exchanges at all. Because if you are producing photovoltaics or you're producing some other widget which needs silver, what tends to happen is that you go to a silver supplier such as a mine and you say, I want to lock in silver for the next 3 years. Give me, I need X million per year. Let's agree that you give me $50 million, million ounces, year 1, 2, 3, and we agree on a price for year 1, 2, 3. And that's an agreement between us. It works because it gives the factory the supply of silver, and it gives the mine or the producers an assured price at which they can sell. So these are called offtake contracts. And there's a large proportion of the industrial world which works this way. If you're looking at industry like cobalt, it's all offtake contracts. Say the future exchange has almost no use in that market. If you look at gold, it's not as much because gold isn't not so much of an industrial metal. It's only about 11% of gold is used for industry purposes. But if you look at silver, a lot of industrial use is involved. So offtake contracts are important. And again, they're important because they don't affect the price of silver as traded in the future contracts. And so the third category of products that are being produced are the LBMA bars. If 27% in 2022 went into retail bars and 73% went into industrial and other users, what happened to LBMA bars? How much of that was being produced? Well, and here's a fascinating thing, very little to nothing, because LBMA bars, it's what's being produced when you have a surplus. If the refinery runs out of retail bars that they can produce, because they have a higher margin, so of course they want to produce retail bars first. If they run out of granules they can produce because not enough demand, what do they do with the extra silver? Well, they make LBMA bars, and those can go into reserves at an exchange or bought by somebody else. So whenever you have a surplus or year over year in the silver market, you tend to have more LBMA bars. When you have a deficit, like we had in 2022 of 237 million ounces, you get a reduction in LBMA bars. So LBMA bars are like your silver reserves. And when the retail investors cannot find a silver bar, or if the premium of these coins are too high, it makes a lot of sense for the retail investor or the physical investor to go buy LBMA bars, if he can find it. Right. And if you're an industrial user and you find out that your demand for silver for your production is a lot higher than your offtake contract can provide for, where do you get the extra silver? Well, chances are you're going to look for LBMA bars. You're going to try and get delivery of these bars which are being held by an exchange. And that's causing the supply of LBMA bars to go down. So to sum it up, you can think of the supply of silver as being made up of these three things. The retail bars, which are about 27% of demand. The industrial and other users, which are about 73%, which makes 100%. And whenever you have a surplus of silver being produced, that surplus goes into LBMA bars. If you have a deficit, the people who need that silver are going to throw it out from the reserves. How much reserves do we have total of silver? I'm not sure exactly. We can look up at how many silver reserves are held by exchanges like COMEX, LBMA, and so on. And you will see that over the last 2-3 years, these exchanges have plummeted by 70%. So that's a lot less reserves now. So that's the big picture from the physical side. How does all of this affect the actual price? Well, the price of silver and gold is determined in future contracts. Future contracts like COMEX in the United States will trade the price for a certain period of time, from in the morning to the afternoon. It will then be taken over by some other exchange somewhere else in the world. So you usually go from, say, Tokyo, you're heading over to London, you're heading over to COMEX, you're heading over to something else. And so you have this 23-hour or 23.5-hour trading window per day, and for 5 days a week. And then Saturday, Sunday, the exchanges are closed, which is why you don't really see changes in the price. So if people buy silver and there's no long contracts being made in COMEX, does it have an effect on price? Well, it depends. But COMEX and these other future exchanges is where most of the price setting is being done nowadays. The first thing to understand with future contracts is you can have a long position or you can have a short position. So a long position means that you're coming to the market and you say, here's a bit of money. I want to bet that silver is going to go up. Now, in order to buy something, you have to buy a contract. A contract is 5,000 ounces of silver or 5 LBMA bars. And usually you only need to put down 10% or so. You pay for 500 ounces. If silver starts going down, you have to top up quickly or you lose your position. So it's highly leveraged. A short contract is for somebody who wants to bet that silver is going to go down in price. In the future contract, you don't need to own the silver, physical silver, to short something. So anybody can come in with a bunch of money and create fictitious silver, basically, sell it in the market at a 10 times leverage. So who are the players who are determining the price of silver in the future market? So if we take COMEX as an example, which is probably one of the most talked about exchanges, you will find that around 60% of the open interest which is out there, which means the contracts which are there, are actually coming from what's called commercial users. Commercial users, when somebody opens an account with COMEX or buys something, essentially the exchange decides, is this a commercial industrial user or is this a speculator, non-commercial entity? Mm. And so if you're a commercial entity, since the expectation is that you're not doing this to speculate on the price going up or down. You're doing it to hedge yourself. What does that mean? Well, if you are a producer of silver, if you're a mine, and you are worried that the price of silver might crash, you want to hedge some of that position. Now, keep in mind, as a silver mine, probably a lot of your production has already been taken care of by doing offtake contracts outside of the exchange. But let's say you have some additional supply and you want to prevent it from falling in case silver goes down. Mm. Keep in mind, when you do that, it's not free. You're also losing the appreciation of it. But if you're running a business and you're tight on money, oftentimes you're more worried about making sure you can pay the bills than the extra money of it going up. So if you're looking at the amount of net position in this market, you will find as of January 2024, I just looked up the numbers before we did this interview, said something like 70% of commercial users are actually shorting silver. And the numbers, I think, are about 250 million ounces in net short positions. So that's the producers of silver actually are hedging themselves, which causes downward pressure on the price of silver. So this is happening even though there's not enough production of silver to make up for the demand. And so prices haven't necessarily been going up that much because this hedging demand by the producers. Then you have the other side of the coin, which are the non-commercials. Now, the non-commercials, they are the banks, they are the financial institutions, they are the funds, they can also be individual investors. And these entities tend to buy or sell silver depending on what the expectation is. So if you're getting the news that interest rates are about to go up, then institutional investors like to sell silver and gold, like it or not. Now, retail investors will think, well, interest rates are going up because inflation is going up. My US dollar is losing 8 or 9% of its value per year. It makes a lot of sense to buy gold and silver now, right? That's a mentality, I think a healthy mentality of, say, retail investor. As an institutional investor, you're saying, well, interest rates are going up. That means my cost of funding is going higher. I need to sell various things, especially commodities. And besides, US bonds now are paying more interest. And so there's sort of this knee-jerk sort of reaction where institutional investors will start selling some of the silver. Now, because institutional investors are having such a big effect on the price of silver because of the leverage, and because as the main participants in this market, it has such a big effect on price. But that effect on price is not really directly reflected with the supply and demand of physical, right? At least in the short to medium term. And once you put these things together, you will essentially see why we can have a situation where the physical demand is increasing and increasing at a faster and faster pace now, and yet the price hasn't really kept up.
So let me unpack a few of the things here. I'll start off with this year. The expectation is Federal Reserve Chairman Jerome Powell, he may be lowering interest rates. So if that should happen, then we may see silver go up.
Yes. So, and we are seeing that whenever there's expectations that interest rate might be coming down, we are seeing the silver price sort of go up. It seems to be going very quickly. So that's one reason where, in 2022, interest rates went up very quickly. That created a lot of headwinds. Institutions were selling, trying to push the price down essentially. And then it was the physical and the industrial side sort of buying more and more silver, and that sort of caused the price to go up. By 2023, we still had institutions sell. On top of that, we even had retail investors starting to sell in 2023. So I think the big picture is 2022, interest rates went up very quickly. Institutions sold a lot. Physical demand started recovering because of industrial use. And bullion investors bought a lot of retail bullion. But overall, it was institutions which kind of caused it to go down because they're raising interest rate. 2023, institutions were still net sellers. Retail investors also became net sellers. And the industrials ended up soaking up, whatever supply is coming out there. Because I think by 2023, once the Silver Institute is going to release its numbers for the year, we're going to see that the deficit of silver probably has increased over last years.
Okay. Yeah, because that brings up a question where I think a lot of the guys out there, their view of the comics anyway is when we have all these short positions, they see it as paper and they don't necessarily think that there's actual physical behind it, or much anyway physical behind it. So I think the question a lot of people have is, these people actually, they shape the market. They can move the markets when they start selling silver. People see sell, 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 so the price starts going down. They can move the market to actually sell and push the price down. Yet there may not actually be any silver behind it. So I think in their view, to the best of your knowledge, are they selling the actual physical or more of the ETF?
So when it comes to the future exchange, you can see how much silver is available in the warehouses. Now, um, based on the latest COMEX report, there's about 42 million ounces worth of available silver at COMEX right now. How much is 42 million? Well, we had a deficit of 237 million. So 42 million is enough to cover the silver deficit for 65 days. Now, if you look at all the long positions and the short positions in COMEX right now, it's actually more short positions than there are long positions. If you net these out, what percentage of silver reserves are there for net long positions? Well, if the net long positions are negative because there are more short positions, how much do you really need? So how do you value these things, right? If you go for what is called open interest, which is the total number of contracts being traded out there, you will find that we have about 700 million ounces worth of open interest between long and shorts. And you've got about 42 million worth of physical reserves behind it. Is that a fair way of sort of looking at it? I'm not sure. I think we can all agree there's very little metals there. Right. And I think what we ought to look at is the tendency and what the different players in the industry are doing, because the industrials are in dire need of more silver because of photovoltaics. As photovoltaics is beating every expectation by a large margin. The Silver Institute last year, expected about $300 million, 300 gigawatts worth of photovoltaic installations in 2023. Bloomberg is estimating that we had 414 gigawatts. The IEA is saying 440. So we have a huge amount of silver which is now flowing towards the photovoltaic industry. And where is that silver coming from? Well, it's coming from offtake contracts, but that's only going to cover a portion of it because so much more silver is needed than demanded. It's unavailable. So where is that coming from? Well, it's coming from the future exchanges because that's one cheap source of getting silver. And so I became aware of the photovoltaic sort of story because I had a reporter from a major news agency, also big global ones, call me up and say, we've got people in the Shanghai Gold Exchange, which there's so much silver flowing out. Yeah. What do you know about it? And that's what got me into all of this. And it, so photovoltaic, or the silver industrial users, basically are now buying up long positions on these future exchanges and taking delivery. And so that's why we only have 42 million ounces left on the COMEX now, because the inventories went down by around 70% over the last 2 or 3 years. So what that means is, while the institutions and the paper guys can set the price of silver and gold in the short term or medium term, at the end of the day, and industrial users cannot use paper to make the solar panels. It needs to be the physical. And when they're running out of easy supply in the form of granules, they're going to go to the next easiest supply, which is LBMA bars, which are the reserves. And these reserves have been falling by 237 million ounces in 2022. And they're going to be falling, I believe, by a lot more in 2023, once we get the numbers out. So is the price going to go up because of it? Well, there are two ways this has to play out. One way is that by April of 2024, the Silver Institute will release a new set of numbers of what the supply and demand for 2023 was. And when those numbers come out, I think the big media outlets out there like Reuters and Bloomberg and so on, they will feel confident enough to run the story of how silver is essentially becoming the new oil for photovoltaics. Because once you look at the photovoltaic growth and how much silver is needed for that, it makes a very compelling case for buying silver. But if you are one of these big editor in one of these big media outlets, you don't want to write a story where you might be accused of giving investment advice. So the story about photovoltaics and the demand for silver and how much of the silver is really being used up, it's not really reaching the institutions or the public at large. So they don't see the point of buying long contracts on silver. But I think that's going to change in April because the Silver Institute will provide numbers which the big media outlets will feel confident to write about. And so that story is going to start going out and become more mainstream. So I'm looking at April for, probably a swing up on that side. Now, the other ways that can play out is that at some point, we are simply going to start running out of easy to obtain silver because the industrial demand is getting so strong that if you're running out of silver reserves at COMEX, where do you going to go next? And when that story is starting to break, then you're also going to see silver go up very quickly. So at the end of the day, like anything else, in the markets, psychology plays a big role, and the reality out there is not always reflected in the market price. But over the medium to long term, it has to be reflected. And I believe 2024, we're going to see that breakthrough.
Okay, and so if I'm understanding this right, it's not going to be the retail investment side where we see the 100-ounce bars or the kilo bars that's going to be moving the price. It's really going to be the granules for industry as well as the 1,000-ounce LBMA bars.
That's the physical demand.
Yes, physical.
Is, I believe, going to be primarily from the industrial side.
Okay.
Because of that amazing growth that is happening in that sector. I think retail will also play a role because I believe that the 2024 will see a shift back with the retail investor coming back into silver. But essentially, I think everything is going to align because industrial demand is going to go up a lot. We are going to see the institutions which have sold in the past because interest rates were going up. We are now expecting interest rates to start coming down. Mm-hmm. So naturally, we would expect these guys to stop selling and start buying. On top of the story about how much silver is being used up by the photovoltaic industry, starting to go mainstream. So that should be very bullish. And so we essentially have all three groups being set to become positive: industrials, institutions, and the retail market. And I think institutions were the ones which have been holding the price down, these last two years. But as you're running out of physical silver, that story has to change, and it will change.
Okay, and so I guess in summary, where you sit and as you swivel around 360 degrees, you see a lot more than the rest of us out there see. The fundamentals, are they increasing more and more to purchase silver?
My money is almost all in silver. I think it's just been undervalued for so long. And if you look at gold and silver, so we have a gold and silver ratio of around 85 right now. Silver is very cheap. And people will point, well, gold has been doing better than silver. over the last 2 or 3 years, and that's true. But at the same time, you want to buy whichever material is cheaper. And silver has a history, once we go into these bull markets, to really go up very, very quickly, because the market is a lot smaller than the gold market. Even small amounts of money going into it are going to drive the price up. So I see just everything primed, for silver to go up. Can it go lower? Maybe, but I don't think it can go lower for a long period of time. It's just too much need for it.